Reaction to the medium-term budget policy statement. Now, Colin Coleman, former CEO of Goldman Sachs, Sub-Saharan Africa. He spent time at Yale University. He's also co-chair of the Youth Employment Service. He's been involved in debates recently as well about the way forward for our economy. Colin, good afternoon to you. Good to see you back in the debates in Southern Africa, although not everyone disagrees with what you've been saying. You've been suggesting that we need an economic stimulus, if I remember the figures correctly, a basic income grant, an unemployment grant, if you like, of around 800 Rand. The Finance Minister from today's speech, I don't think he necessarily agrees with you.
Well, let me just say that I think, with no disrespect intended, today's medium-term budget statement is something of a non-event. In some ways pretty disappointing because, Stephen, despite the fiscal space of the extra 120 billion Rand of revenue against the backdrop of the highest unemployment rate we've had in this country and one of the highest in the world, against the scourge of the pandemic and the energy crisis all South Africans are living with every day, there was absolutely no sense of the crisis, no announcement on the key issues or resolution of the key issues, and no real economic strategy to drive growth forward. And so my sense is the economy is somewhat on autopilot and directionless. We didn't hear anything on the social distress grant. By the way, I haven't promoted a basic income grant, as some do, a universal basic income grant. What I've suggested is a focused unemployment relief grant, basically increasing the 350 Rand on a multi-year basis per month to 800 Rand per month at a cost of 2% debt to GDP, which the debt to GDP current ratio that is presented of under 70%, growing to 78% by 24-25, is quite modest. So we have fiscal space, is what I'm saying, to undertake, as you say, a fiscal expansion to drive growth. But there seems to be no appetite to take the country on a new trajectory, which is really what we are suggesting. There was no resolution of the Eskom funding and no resolution of the business support program, which is an important underpinning of small business and medium businesses that have suffered because of the pandemic. So I'm afraid that when you look at things very coldly, 27 years after the birth of South Africa's democracy, where non-racialism, national unity, social democracy and inclusion was the guiding beacon for the nation, do we see that today in the announcements that we heard from the Finance Minister? I don't think so. So I think we need really to ask very deep questions, very uncomfortable questions about where the economy is going, because if what they're projecting, which is effectively population growth equivalent economic growth rates, it means that people in South Africa are not going to get any wealthier. Without social grant expansion, we will not be able to come to the aid of those 12 million South Africans who are unemployed, and we won't be able to grow the economy. So we're kind of stuck, is what my feeling is in response.
I mean, I think that feeling of being quite stuck in our economy, I think, must be absolutely correct. It's certainly how I'm sure those 12 million people without jobs and millions of people with jobs feel. The Minister and people who've responded to your suggestions have said that we need to focus more on growth. To do that, we need electricity. And I mean, as you say, I don't know if we see in this speech anything that's really going to lead to more growth. It seems to be a bigger problem.
Remember, the suggestions that Nouriel Rabini, the PIMCO colleague that I wrote the article with and myself were making, was effectively a package of the structural reforms. Now, the Minister did talk about those structural reforms. The problem in the past, Stephen, of course, is that we haven't seen the execution of those structural reforms. So we have to ask what is going to be different in the next 12 months so that when he next gives a medium-term budget statement, we don't have to repeat the call for these structural reforms. So we need the structural reforms, number one. Number two, we absolutely need the fiscal stimulus in order to get the growth function going. And there is a relationship between the social function of welfare provision and growth itself, because if we don't get productivity going for half of the population that don't have jobs, we can't really get the productivity of the nation going itself. This was famously articulated by Danny Roderick, one of the Harvard economists, who basically wrote an article on the interrelationship between the social function and the growth function in driving economic growth. And so, these are interrelated subjects, and the whole subject of fiscal expansion to drive growth is well worn. This is something that you've seen in all of the economies of the world in the COVID pandemic, which means you effectively drive growth faster than your debt rises, and therefore you bring your relationship between debt and GDP down. And we've seen actually the debt to GDP function coming down as a consequence of the commodity boom. Might I say quickly, one of the points that is made by the minister, but also by various commentators, is that the commodity boom is short-term, temporary. Well, actually, a deeper analysis of the commodity cycle in the world will tell you that what's going on at the COP26 summit in Glasgow is a fundamental structural change in the investment cycle around economies in the world, such that this commodity boom is being driven by a refitting of the world's largest economies, China and the United States and the EU in particular, for climate change. And that investment is what drives companies like Tesla and many others that are effectively, re-engineering the world economy, and that is driving commodities. Now, that is not temporary and it's not short term. So we should be using the fiscal space aggressively to drive investment into the social function and into the growth function, certainly getting the productivity side of the economy going. Please do not misinterpret what I'm saying. I don't believe that we are going to grow the economy on the consumption side. I think that the social welfare grant plays a role, but we have to get the productivity of our economy, of our businesses, and the investment cycle going. And, the minister will have everyone's support in that regard. But we have to do this as a strategic tilt of the economy. I don't see that strategy at this point in time.
Colin Coleman, I really appreciate the time. Thanks very much indeed. It's a very high-profile debate that's been happening around the best way to grow our economy. You've heard Colin Coleman's views on the medium-term budget policy speech today. Coleman is a former Goldman Sachs CEO for Southern Africa. Of course, spent time at universities and with the Youth Employment System program here in South Africa as well. Well, a lot more.